All right, awesome. Welcome everyone to the simulation session. This is the 21st April. And what we is we will okay. So looking at the weekly, we are at the top, right? So just by looking at the candles, I like to zoom into the candles. Looking at the candles, we need to identify or we need to visualize how we see the next candle forming. So maybe the next candle can wick down and then move up to fill this wick here through the left hand side, right? That could be it. So ideally, we'd say, okay, the bias is buys. Okay, awesome, perfect. Looking at the daily, we can also see that this daily candle, before we moved up, we were consolidating, right? And the way we know we were consolidating was because the candles were printing side by side right here. Okay, so we had candles printing side by side, resistance form, rejection, candle close, resistance, and then this daily candle broke and closed above this area. At the same time, obviously now we have a resistance form. Now we need to identify a support because whenever you're looking at a chart, we need to look at support and resistances, right? Whether that's near or clear or whatever that is. So we got the resistance, and the next or the previous recent support is right here. Okay, right over here. You could argue that maybe there's another one right over here as well. So that's true. But the most recent support is right here because before price moved up, we created support on the daily candle, right? Let's take a look on the 4-hour time frame here now. Looking at the 4-hour time frame, now we have to adjust these zones. So we mark them on the daily, and once we mark them on the daily, we need to realize that these zones are now going to overlap on the 4-hour time frame. And that's why most of your analysis, they look like this. You'll draw zones on a daily time frame. You're going to go down to the 30, and your zone is going to look like this, right? Like it's overlapping the candles, not clear, not aligned properly. So it's very important. So now when we're looking at the 4-hour time frame, we need to adjust these zones based on the time frame that we're looking at. So I guess for this zone, we could bring this all the way up over here because this is where the most recent 4-hour resistance is. And at the same time, the most recent 4-hour support, we could say is right over here. Simple, right? Not down here, not here, right over it. The most recent support. And the most recent support before this is possibly right here. But since it's too close to this area, we're going to look at this one right here at the bottom, around 2360. So that's where we have this area right here. We have the support. Let's make this a little bit more cleaner, smaller, better. Okay. All right. Let's take a look on the 1-hour time frame. Looking at the 1-hour time frame, now you can see how the zones are aligning a little bit. So if you look on the 4-hour, the 4-hour support has these wicks going down. So obviously on the 1-hour time frame, though they may be candles, right? So now we need to adjust this based on the 1-hour time frame right here. And then after the support, we had a most recent support right here around 2387. Makes sense. So we have this resistance, we have the support, now we have this range. This is a 120 pip range, massive range. Looking at the 30-minute time frame, we could argue that maybe this is resistance around 2398 resistance here. But right after this resistance, we have another one, which is 16, 15 pips away. So we're going to mark this as an important one right here. Because above this resistance, our range to fill is 95, 96 pips, massive. Let's drop down to 15-minute. I usually don't drop down to 15-minute. I wait for the 30-minute candles. But I'm looking at the 15-minute, it's like whatever. So now the analysis could be that if we're creating support on the 30-minute time frame, and if we break below 2386, how far can price go down? You look at the left-hand side, look at the candle, boom, big candle, right? How big is this range? 81 pip range. So now ideally, I'm going to have to wait for price to break below 2387 because I have a, 80 some pip range. And that makes sense to me. Probably buys above this area. Or if we create some resistance here or whatever, then you could say, okay, like, I have a 58 or 60 pip range to go up. So don't think that you don't have to trade in this range, because 130 pip range, if we form some market structure meaning a support or resistance within this range, and you have enough area to cover, then that could be a possible good trade. So that's how we did it. Oh, so we got to move the support down here. So actually, right down over here. Right. So that's how we did a top-down analysis from the daily down to the 30-minute to be able to identify how we could look for a possible trade. Make sense? Makes sense. Clapping. Perfect. I have a clapping emoji right there. Awesome. Thank you. Okay. So let's pick a random date over here. Right now, mind you, this was easy, right? This was easy. Sometimes, it may not be easy. Like if you look at pound yen here, I'll just quickly do some zone work. If you look at the pound yen on the daily time frame, daily is basically consolidating right here. We have a resistance. Anyone have audio problem? No. Right? We have resistance. We have some sort of a support down here at the bottom. We look at the 4-hour time frame. Now 4-hour has zones. Maybe we could bring this right over here, right? Because we had a support. Oh, wow, look at this. We had this massive rejection at this point. Let's take a look on the 1-hour time frame. 1-hour has a support formed, and obviously 1-hour has a resistance up over there. Maybe this area could be some sort of something on the 30-minute time frame. Let's take a look at this. 30-minute, obviously we were right? Look at this, right? So I drew this on the 1-hour right here, and maybe there was an issue because, this candle had a rejection. Looking at the 30-minute now, boom. How clear is that? Aligned properly, right? And wow, yeah, this analysis is pretty cool. On pound yen also is setting up to be something promising in terms of a trading idea. If you look at this, if we do break above 191, 570, 191, 600, you got this big range, 62 pips. Below this area as well, you got a range, 48 pip range. Audio comes first and the chart's moving next. There's a sync problem. Maybe I'm moving the charts later on. Yeah. Okay, let's take a look. Yeah, right there. Perfect. That makes sense. Okay, now the 15-minute, I don't take a look at that a lot because it's a weak confirmation time frame, 15 minutes. So I just look at the 30-minute. So, okay, so let's do these random dates. And so what we're going to do either way is, oh, no, 2021. We got to keep it more relative. So we're going to be waiting for, what year is this, 2021? So we're going to be waiting for the 30-minute candles to close. January 1st. We only want Sundays. Okay. Oh, initial total concern is only 13. Okay, let's do this. Okay. From January to March. All right, perfect. So we got January, February, March. Let's do 28th, 18th, 18th Feb, 7th Jan, 21st Jan, 3rd March, 10th March. What's this? 18th, 2 to 18th, 2 to 18th, 2 18th, 18th Feb. Okay. Let's do 18th Feb. So we're going to go over here, market replay, boom. And starting capital is going to be 5,000. 5,000 is starting capital. And we're going to go towards 18th March right here. M1 bar is okay. Open prices, take data from server. Okay, awesome. And the time is going to be, so the time is going to be around pre-London. Okay. Time is going to be around pre-London. So pre-London time here in Dubai is 12:12. No, 9, 10, 11, 12, 1, around 8 a.m. 8 a.m. is 12 a.m. Eastern. All right, so we're going to load these charts over here. Let's see how we load up. Oh, wow, yeah, it's going to take us time. When you said start capital, your screen was at date generator. Anyone experienced this lag or, oh, I think it's probably you. But that can't be possible because the audio is running at the same time as the video is moving. Yeah, probably. Yeah, maybe leave and come back again. I think that may fix the problem. All right, this thing should hurry up over here. I have a question. I got a simulation session going on from 2021 on C-Trace. Should I? No. Okay, so whenever you guys will do a simulation session, make sure the simulation session is relevant to your time, which means it's relevant. I mean, you should only simulate the last 6 months because the market it moves in cycles, right? And you want to be in the correct cycle. So that's what I like to do. I like to simulate only maximum last 6 months. It doesn't. Looks like we'll be simulating GJ rather than gold. Oh, that is not correct. We will be simulating gold. All right, there we go. Nice one. 5,000, and we're doing. Yeah, I forgot. All right, there we go. Pick there from server. All right. Okay. Yeah, the last 6 months, that's way better. Most of the time, like it works amazingly well. Are you stupid or are you dumb? Assalamu alaikum. Wa alaikum salam. How are you? My friend, you're doing good? All right, let's see if it's charging over here. Okay, perfect. We are. Oh, all right, there we go. Beautiful. So now you'll be able to match the audio. Now you can be able to match the audio with the video. Will this be saved? Will this be saved in the database? Yes, it will be saved in the database. So if you miss it, don't worry. Don't worry, it's going to be saved in the database and you'll be able to see it. All right. Good thing I have fast internet. Imagine my internet was slow. This wouldn't work at all. Put this phone in charge. We need a better tester than inbuilt C-Trader. What do you think? Yeah, that's true. We do have okay, there we go. We do have the MT5 simulator, but let's see this over here. All right, let's pause this. Let's take a look at the time. This is the 4 a.m. 4, 5, 6, 7, 8. Okay, awesome. So obviously the time we requested wasn't there. So what we have is the 17th February FX replay I tried. Okay, so we have the 17th February, and we're going to continue on till pre-London. Now, pre-London, starts around 8, 9, 10, 11, 12. Around 8 a.m. Dubai time is 1 hour before pre-London. So always remember, if you've been through the sessions module, the sessions webinar, or if you will go through that, we explain the times when there's volume in the market, because you should only be trading when there's volume in the market. So if we're taking a look at this, so we need to see that, okay, if I'm not trading the Asian session, I'm going to be trading the pre-London session. So I will let the candles play and move into, okay, so what's this time here? Can we see the time? Oh yeah, we can see the time right up over there. So I'm going to forward the candle by 30 minutes. There we go. Boom, boom. This is now 12 a.m. Eastern time, 1 hour before pre-London. Right now, obviously, we don't have the luxury of looking at the daily time frame or like, the 4 hour or the 1 hour to do any top-down analysis. What we can do is we can just wait for the candles to close, and we can kind of like, identify, or we can maybe visualize where we can see the next candles to go. I think the next simulation, I'm going to bring back the MT5 simulator, which was way better. So what's the trend? The first thing we need to identify is what's the trend. Can someone tell me? Okay, the trend is bullish. Awesome. We can all see the trend is bullish. Perfect. No problem. Awesome. Right now, if the trend is bullish, what are we looking for price to form, like based on market structure? What are we waiting for price to form? Support. That's it. Basically, we're just waiting for price to form some sort of a support. And once you form support, I think there's a very high probability if we trade the trend, we can go up. Now, obviously, when price is moving down like this, okay, now we have some time, since we're waiting for support to form, we have some time to plot out zones, okay? So the first zone is going to be a resistance zone, I guess, right over here. This makes sense. Oh, why is this purple? Let's put it gray, a little bit opacity, add a little bit opacity to it. There we have a resistance. And now since we have the resistance, we have to plot out the most recent support. Okay, so the most recent support is going to be, oh, what's going on over here, man? Okay, I guess we'll have to do it one by one. The most recent support will be right down over here. Beautiful. So now we have this range. This is a previous support. If price can come down and reject this area and create some sort of a support, we have a 40 pip range. I think in this 40 pip range, then we can have a pretty, I would say, like a solid trade. As we look at the time here now, we're moving into a pre-London session, right? Pre-London session is going to start in about 5 minutes, 5 simulation minutes, 3, 2, and right on cue. Right on cue, we have the 30-minute candle. Oh, yes. Thank you. So right on cue, we have the 30-minute candle. I like this colorway better. And the 30-minute candle has created some sort of a support, right? So now notice how before the support was right down over here around 2017. And now the support, the most recent support, is right over here. Now, if we're looking for some sort of a buying opportunity, we have to ask ourselves that if I do take a buy, where is my stop loss going to go? Can someone tell me where the stop loss is going to go? Will the stop loss going to go somewhere below this zone so that we can respect the zone, or the stop loss is going to go below the previous 30-minute candle? Below the previous 30-minute candle, right? Because if we're looking at an uptrend, like look at this right here, right? So we formed some sort of a support, even though the candle was formed like this. For price to move up, this candle didn't break the low of the previous candle. Good. So this new candle that's forming, it shouldn't break the low of the previous candle at this point. So what we're going to do is let's go on with like what? It's one lot. It's $5,000. Let's go with 0.75 lots, right? So we're going to execute a buy over here. Buy position. Stop loss right down over here. Very good. Look at that. 9, 10 pip stop. And we're looking at volume to bring price probably right over here. Because we have these clean ranges here to the left-hand side, right? It's this clean range that we have to the left-hand side that we're trusting because, we're waiting for the 30-minute candle to close and the 30-minute candle has closed. Now, as long as this candle doesn't break the previous candle's low, we're good to go. But we're going to keep an eye on the 15-minute close here as well. Look at this. Look at the time right here. The 15-minute candle is going to close in about a few minutes. Boom. What's this? Waiting for the high to be broken, a safer entry. Okay, I've explained that in the impulse entry situations. Okay, big stop loss we're not going to discuss over here. But we should take buy when the candle breaks the previous high. No. Okay, so here's the thing. When this candle breaks the high of the previous candle, the reason why you're trying to wait for that is because, like, you know about impulse entries, or what you're saying is, okay, maybe I'm not going to be too confident enough to take the trade. So whenever there's a solid confirmation, the solid confirmation is going to come over with your 30-minute time frame, trading some sort of a support or trading some sort of a resistance. And you have to have enough confidence to execute on that. Because if you're going to wait for the high to be broken, this means you're not confident enough, so you're willing to let some pips go away and then enter the trade. Because, for example, let's say the wick on this candle was bigger. Then you would have waited those wicks to cross and then take an entry. So anyway, we're up about 14 pips at this point. So what I'm going to do over here is, can I close partials here? I cannot close partials here on this simulator. Can't close partials. No problem. So can't close partials. CJ, maybe take smaller entry. Yeah, exactly. So we're going to secure this right here. Take a look at the history. Okay, this was a trade. Awesome. And now let the rest of the price run. Would you take a normal risk even the 30-minute didn't break the previous high? No. Before we start to entertain questions about, candle breaking the previous high or doing some sort of things, you guys have to really understand and go through the impulse entry sections. Impulse entry sections are very, very important. It's going to take you more than 2 to 3 months to really understand impulse entries because there's a reason why you take impulse entry. And the reason why I took profit over here was because we had this impulse move up 20, 21 pips. So that's why I wanted to secure partials, but you can't close partials here. So that's why I closed full. So now the next one, I'm going to open multiple, but you get the point, right? Now, if we are trying to move up, we're creating these higher lows, higher highs, higher lows, higher highs. So as the candles start to move up, okay, so let's take a look at this. Now, if you missed a trade, if you missed out on the trade, and if you're trying to take a trade right over here, your probability of success is going to be lower. Because for you to take a buy, number one, you need to have a good price, right? Number two, the buy that you take should be as close to support as possible. This is something I've talked extensively in the Trading the Trend section, right? If you're trying to take a buy, it has to be as close to support as possible so you have a better probability of winning. Right over here, it's not close to support. So even though if you take a buy, you may win a trade, but then that's going to make you think it's going to happen all the time. It's not going to happen all the time. It's going to be very, very tough. So always, do that. Sometimes the previous candle, more than 35 pips, do we enter with big stop? Yeah, depends, You could place your stop loss based on a 15-minute time frame. That's something that you can do. Yeah. You can place a stop loss at the 15-minute time frame, but if still it's big, then I would recommend to lower your lot size. And then my risk reward here is almost I don't focus on risk reward. This whole concept of risk reward, it doesn't really make sense to me, because okay, so So when we take the next trade, then I'm going to talk about risk reward. Wow, look at that. How big is this range over here? This is a 30 pip range. This is a 30 pip range. You were saying if you missed a trade. I forgot. I forgot what I was going to say. Yeah, my bad. I forgot. Okay, so now we're running into what session are we running into right over here? 10, 11, 1, 2. We're almost into the, oh wow, look at that. We cleared this entire move. Beautiful. Tapped into that. This is going to be a very tough time for price to break out. We have London Open coming up. We have London Open coming up. So we're going to wait for London Open. I don't look too far in the price. I only look a couple candles before. That's it. Like if I'm looking to see if I can, now this is also a clean range, right? 1, 2, 3, 4, 1, 2, 3, 4, 5. 5 candles, boom, 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 right? I don't look too far. I'm only going to look at these 5 candles and I'm going to say that, okay, if we can create some sort of a resistance, maybe there's a possibility for price to move down. Maybe there's a possibility. That's all what I'm going to look at. To sort of like execute a trade in this range, I'm not going to look at all the way to the left-hand side. I'm only going to take a look to the left-hand side if we break above 2022. Okay. And if we do break above 2022, and if there's nothing to the left-hand side, then I'm just going to say, well, Jesus, take the wheel. Take us to wherever you want to take us. And we will just go. And gold's going to say, come on, let's go. You know? So that's what I do. And even if you look to the left-hand side and that left-hand side is like, 6 months away or like a year down the road, I'm not going to focus on that. I'm just going to focus on, okay, we're breaking above this high. We're going to make a new high. There's volume in the market. Can I get 15 pips, 20 pips, 30 pips out of it? That's it. So let's just wait right over here now. If you miss a trade, you wait for the support to form for a retest. You got enough space. You take your second entry. That's correct. Yes, that's correct. So this candle is about to close. And this is the London Open right over here. And boom, this is London Open right here. This entry was new for me. Now I know where I'm losing entry. Yeah, exactly. So, okay, this is London Open right over here. Now, obviously, someone's thinking that, okay, we are in an uptrend. And if this candle can close bullish, this means we've created support. And then we can continue to move up and volume from London session can break above this area. Awesome. But if we create some sort of a, stronger resistance, then there's a possibility for price to move down. Whenever you're looking at price action, even though you'll have a bias, look at it from the perspective of sells and buys. These two perspectives you need to look at a price action with. All right, look at that. What's the spread over here? The spread is it's like a 1 pip spread. Not bad, not bad. If you're trading 15-minute time frame, don't trade the 15-minute time frame. Don't trade a 15-minute time frame. Very, very risky. Low confirmations. 15-minute candles are going to close in a way where, oh wow, look at that. See, that's the reason I didn't take a sell, because in a heavy uptrend, right? In a heavy uptrend, you have a weak candle closing bearish. This doesn't mean a sell. Even though the next candle could go down, I wouldn't. Nah, it just doesn't mean a sell. So yeah, we're just gonna wait some more here. We're just gonna wait some more. Yeah, so 15-minute are weak confirmations. The conditions I'm gonna look for a sell is that it should be a solid bearish candle. I don't know what it looks like, but if we close a strong bullish candle here, man, this is going to be a very good buy. This will be a very good buying opportunity right here again if we close bullish like this, right? Then we can say, okay, boom, this zone goes away. We have uptrend, candle closing bullish, London Open, high volume time. Let's fucking go. So we have to wait. We got some time over here, so we're going to wait and see what happens. Oh, wow. It looks like we're rejecting. That's pretty, ooh, that's a rejection right there. See, trade executing so fast. I'm currently using, oh, awesome. Yeah, so if you are experienced in market fluidity, you would know what an impulse entry is if you are experienced. But if you're new, you wouldn't know. So we're gonna go off of the basis of waiting for candles to close. Yeah, look at that. It's trying to move down over here. Yeah, so oh wow, look at that move. Yeah, sells only if we have a strong candle closing. And this is something I've talked about in the counter trend module, how to do the counter trend. So this is sort of going to be a counter trend. If this 30-minute candle can close, I'm only looking at the 30-minute candles to close. Only looking at the 30-minute candles to close. Wow, this is still Monday. Pretty long Monday over here, waiting for the candle to close over here. So let's see how this candle closes, forward it. Oh, wow, look at that. We close like this. We have a wick to fill, right? We close below this weak support. We have this wick to fill, 12 pips, and then we have this range, 23 pips. So since we've already taken a trade, and this is a counter trend trade, which is risky in itself, we're just going to lower the risk, right? Lower the risk and take this. Now, the question could be, isn't this a rejection wick? There are some rules you can play with, even though this is a rejection wick, but you have to look at, okay, so the rejection wick is the only thing that's going to tell you it's not a sell, right? But then you got to look at things that will tell you it's a sell, right? Number one, we rejected right up over here. Number two, the candle closed bullish, but it was a weak bullish candle and we formed support. Number three, the support got broken with a bigger bearish candle, right? So these are the conferences that are telling you that this may be a good counter trend sell. The only thing that's telling you no is this rejection wick. And now, if you're not confident enough, you don't take this trade at all. If you are still experimenting with this, you lower your risk. That's it. You just lower your risk. Okay, so since I'm still experimenting with this, stop loss is going to be 10 pips. I'm willing to lose $15. I've already made $100, and just trying to see if, this makes sense. That's how this is why simulation sessions, going through different, setups and experimenting with things is very, very important. Wow, look at that. So it's only been like 5 minutes here now. And we've started to push down. And I think this is a very good push down. And since this is, an extra trade that we're taking a little bit risky, so maybe bring my stop loss down over here. And the reason why I'm bringing my stop loss above this candle is that if this candle now breaks its own high, then there's a probability it can continue to push up. So now this is why risk reward, it doesn't make sense in my opinion, because okay, so if I had my stop loss right over here, I have like maybe 1 to 1.2 or 1.3 risk reward at this point, right? Positive. But now if I move my stop loss right up over here, now my risk reward is 1 to 3, right? So risk reward is subjective. And even if, I take profits maybe right over here or whatever. So risk reward is all subjective to me. I look at if I can win a trade, that's it. Or if I look at if I will lose a trade, can I lose less than I plan to lose? So this candle is going to close and let's see. Okay, so new candle has formed. Let's forward this here. Okay, awesome. We won the trade. Great. So let's move on towards Tuesday. Clearly I lost track of time over there. Okay, let's move on towards Tuesday now. Tuesday, 8, 9, 10, 11. Tuesday, 8 a.m. 8 a.m. Dubai time. Here we go. Boom, 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 boom. 8 a.m. Dubai time. 8 a.m. Dubai time is 1 hour before pre-London session. So let's take a look at this right over here. So first of all, we need to create a resistance, which is already formed for us right here. Boom, resistance, and we have support. Now, what can we tell about this zone over here? This is ranging now. This is 18 pips. We cannot trade in this zone. We're ranging. Even below the support, we have like a 14 pip zone right there, and on the 30-minute time frame, and then right up over here, no trade, no range. It's tough. It's very tough. We need some. We basically don't have clear market direction at this point. We don't have something. So the whole idea about trading is to wait for something that you can recognize, or something that makes sense. Right now, nothing makes sense, because if we do break above 2018, then we have this rejection here, we have this rejection here, rejection. It's just a mess. It's a mess. So we need, I don't know, maybe if we can get like a big candle moving down or big candle moving up, creating that clean range first or something, I think that would make sense, but yeah, I guess we'll just have to wait over here. We'll have to wait it out. This candle is about to close. Oh, wow, look at that. Candle has closed above this area. Awesome. That's good. And we're moving into, what are we moving into? Pre-London session. Slowly we're moving into pre-London session. So that's good. We need this kind of positivity. This positivity is needed. We've broken above this area. If we can create some support and go up, I think that's going to be good. That is going to be great. So we'll just have to wait. Just have to wait for the candle to close. Let's speed it up here a little bit. See how we're doing on the candle formation front. Oh, wow. We are pushing up over here, which is good. Look at that. Candle has closed bullish. This means we need a support formed for price to continue to push up. I think that's going to be something we will have to wait for price to create some sort of support. But if we go back below the range, then it's just this move up turns into be a fake out. So we'll have to wait over there. All right, candle's about to close, and boom, candle is closed bearish. Very good. We are sort of like consolidating here, and we are moving into pre-London session. There's no buys, there's no sells. It's just very difficult. If we remember the market structure right over here, where was it? Yeah, right over here. This was very easy. This is equally as difficult. Oh, what happened here? What happened over here? We moved up. No. Did we go back? I think we did go back. Oh no, our history is ruined. We did go back. Okay, let's go back there once again. I think I accidentally pressed stop. So we went all the way back. No problem, no problem. We still have our zones. This is 9:30 now. And we're slowly moving into pre-London session. Oh, there we go. We're going back in the range over here. Yeah, the simulation restarted. Okay, so now we're going back in the range. And this is pre-London session. And slowly volume is starting to come in. But we want some sort of strong confirmation where we know price is going to continue to push up. Yeah, back to 5K, no problem. We will come back on top. There we go. This is the candle we need. This is a sort of candle. Oh, missed it. Missed it. This has to come down so we can take a buy for price to move up. Because now we're moving into volume section. Like, okay, so this is where some people get confused and they say that, oh, Raja, we have consolidation to the left-hand side. We have wicks here to the left-hand side. Why are you taking a buy? Aren't you afraid of this consolidation to the left-hand side? Let me tell you something. You can't be afraid because your weapon here, right over here, your weapon is volume. So if you have volume on your side, and even though you have consolidation, you have wicks, you're trusting volume to continue pushing price up. That's all what you're doing. You're trusting volume to continue pushing price up. So I'm going to lower down the speed. And if it comes back for a little bit of a retracement, I think we could enter a buy for price to continue pushing up. I think that would be great. And I also think, so my original lot size was, 0.75. So let's go with 0.2. 0.2, and we're gonna scale it in because we did create this rejection and we're coming to up here. So we're gonna scale in something. Maybe bring this right down over here because even if it's going to start to go up, it has no business trying to push back down. Yeah, the reason I didn't take a trade because there was no volume at that time. That was before pre-lender. Sort of. And that was the first break. So first break, normally I don't trust the first break if we're coming towards, pre-London session or London Open. I don't trust that first break. Oh, okay. So if it starts to run at this point, then we can't do anything right here because I really want to enter some more positions. How much are we running here? We're running at 5 pips, not much. We're only running 5 pips at this point. Okay, so let's see how this candle is going to close. Wow, look at that. Let's see here. Oh, interesting. Okay, so my normal lot size is going to be 0.75. And it's a good thing it's a 0.2, It's a good thing it's a 0.2 lot size. So yeah, this is a tough one. Since I'm already in this trade. So here's something that happens, right? And I'm going to point this out right here for everyone. Sometimes what happens is you're in a trade and you get scared or you lose confidence and you close out your trade. And then you see that price goes in your favor. You're like, oh man, price went in my favor. I wish I would have held, So, and the reason why I'm bringing this up here now is because I wanted to close this trade, but what if it goes in my favor, right? What if it goes in my favor? So what I'm going to do is I'm going to lower down my lot. I'm going to lower down my risk because if it does go in my favor, then I'm actually going to be in the trade. I'm going to be running this trade. So if you're running a trade and you're losing confidence, just close 80% of the trade, close 50%, 90%, and leave some of the trade running. Now, I'm going to leave this whole thing run because my normal lot size, I wanted to use like 0.75, but I'm already using dynamic risk. So I'm going to be using 20-cent lot. It's still lowered. You can't use risk management on dynamic risk, which is something I talk about in the risk management, whatever. So yeah, I'm just going to let it run over here. Either it gets stopped out or it starts to move up, So now you can see right here, the candle has made a high and come down here, right? And this is something that you only get with experience, something that I'm just going to talk about now. If it happens, it happens. It doesn't happen, whatever. Right? So it has made a high and it's now breaking the previous candle's low, right? What happens to the session trend? So this is a session trend or candle trend. What happens to the candle trend once it breaks the low of the previous candle? That means downtrend, right? Because now it has broken the low of the previous candle. So now there's a high probability for it to continue pushing down. Maybe not, but it broke the low right over here. And if it breaks the high here again, I think there's a high probability to go up. I mean, I don't even know. I'm just putting my thoughts out there at this point. Just putting my thoughts out there, still being in this trade. So we're just going to wait now. 11, 12, 1, 2, 3. So this is London Open at this point. Oh, wow. Nice. So this is London Open right over here. This is London Open and actually not bad. Not bad over here. Let's see if we can continue pushing up till 2022. Right? Let's bring the stop right over here. This is actually not bad. Very good. 27, 28, 30 pips. 30 pips. Yeah, it's good. 56 bucks. Okay. Close this right here. Awesome. Beautiful. When can we, what can we learn from this move? Brother, I just broke down the whole thing. I think the best thing would be to kind of like, go over the simulation later and make notes. If the breakout is in pre-London or London Open, you will definitely take it. Yes. Depends how the candles are forming. That's a very open-ended question. There are a lot of variables in play, you know, like do we have clean range? Do we don't have clean range? Do we have wicks to the left-hand side? Do we have consolidation to the left-hand side? Like, how big was the range where we're breaking out from? Were we basically trending clean in the range? Were we like really sticking consolidation within the range? If the breakout candle, how big was the breakout candle? What was the candle before that candle? Like there's a lot of variables, so it's mostly from case by case scenario. So awesome. Now the trend is definitely bullish. you know how did you catch all those tips? I explained everything. So watch it again. All right, now the trend is definitely bullish. Now we need a support form. Now we need a support form. So we're just going to wait. Yeah, Asian session is difficult. So we're going to wait over here now. We're going to wait for some sort of support form because obviously trend is bullish. We moved up. We're coming down to create some sort of support and then possibly continue to push up. So let's see here. Let's see how this candle will close. Forward the candle. Candle close bearish. Awesome, no problem. Yeah, there's a rejection. So what are you going to do? What are you going to do? Take a sell? You can only take a sell in a counter trend. And that's something I've explained it in great detail in the counter trend section. So we're going to wait for the candle. Next candle. Oh, nice. Look at that. Oh, positive. We formed support with this candle right over here. And this candle is pushing up. But this candle also closed below right over here as well, this resistance. So it's difficult for a buy. Difficult for a buy because this candle closed below resistance. It's difficult for a buy. Can't take a buy. Candle closed below resistance. Wow, look at that, right? Look at that. Such a great decision. On second thought, hold on. Now this trade that I'm going to take it with a smaller lot size. Okay, smaller lot size. I'm still testing how to take extreme good entries. Now, if later on, right, if in an hour or hour and a half, whatever, if price does go bullish, this candle should not break the low of the previous candle. Okay? Look at that. So if it breaks the low right over here, this means we may go down or whatever, right? But if we respect this low, hopefully, if we respect this low, then we're still in an uptrend. I mean, if this candle closes bearish, then I'm going to close the trade. But the idea is that it should close in a way which will say, okay, we're still up at this point. Hey, thank you, Shazeb. I appreciate it. So the candle is about to close here anyway. Let's forward this candle. Oh, wow, look at that. Perfect. This is what we want. We closed bullish right here, this candle. Now we are breaking above this area, breaking and closing above, this area right over here. So this is just awesome. You can blast in a few lots here. Let's say like 70 lots, whatever. You take a buy, stop losses, let's say within the range, because if price is going to continue to push up, it should not come back in the range. It should not come back in the range if it will continue to push up. Now you see candle made a low and then it broke the high. 1, 2, 3, 4, 5. Yeah, volume time broke the high, which means it should not break its own low, and the trend should possibly trend should continue. Probably bring the stop loss here as well. And yeah, oh wow, look at that, very nice. Oh, came down. But like, you get the idea. I mean, now for the candles to continue pushing up, they need to keep making lower lows, no, higher lows and higher highs, right? Higher lows and higher highs, which means that this candle's low should not be broken now. So I think we can trail these stops, move to the next candle, boom, bullish, move to the next one, bullish. We can move these stop losses right here to trail them. Oh, beautiful. Look at that. Maybe close this right over here. Look at this history right here. Look at this trade here. Beautiful. Right? Now let the rest run. Not even let the rest run. I mean, if there's now going to be some sort of a pullback, then there's going to be a pullback. But trading stops. Very good. Awesome. Is this being recorded? Oh, no. Just joking. It's being recorded. Okay, let's move on then. Is this our last simulation? Just drop it to say good. Maybe I'll join a few just to say hi. All right. Let's go to the next one here. This will be 8 a.m. 7, 8. 8 a.m. Eastern time. And look what the cat dragged in. We pushed all the way right up over here. How many pips should you be aiming for on each move? I'd say like maybe 25, 30 pips, but depends on how much volume there is. Gold has had a lot of volume these days. So it's, I'd say like maybe 15 to 20 pips, 15 to 20 pips in the beginning. That should be the ideal goal. All right, let's do this right over here. Make the opacity. Now we are moving bullish. And we have had this big move, this clean range at this point. We have the support down over here. So, yeah, I mean, if we can create support to move up, then I guess we're going to move up. If we can create a support, if we create some sort of a, I'm guessing no one has gone through the counter trend section. Do you use fair value gaps? No, I don't use fair value gaps. Since you guys are in Market Fluidity University, I would advise to just forget about everything you've learned, and relearn everything. Just relearn and see how things go. And I can guarantee you this will be a huge change that you will make for yourself. All right, let's pause this. Candle is closing bullish. Can't take a buy at this point because we've already moved up like, 50, 60, 70 pips at this point. All right, now we have our first resistance right there. We have a resistance and yeah, we have a resistance. We need support, exactly. Exactly. Whole hands, we need some support. We need some support form over here. Getting hot in my office, man. Someone turned off the AC, but let's see over here. The candle is about to close. Candle is closing. We're moving. 9 simulation minutes left. And boom, candle close. As you said in pre-London, you don't enter on the first break like a resistance break. Yeah, but this wasn't a break. This is just continuation after we've been continuing. A break is going to be if we were consolidating and we broke. This here, we were moving up, boom, 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 fucking rocket ships here. And then we broke above here, so that's a break. So now we have some sort of a, pullback in the range. So now we have to wait for some sort of a support to form. If we can form support, this means there's a possibility we can go up, right? Or if we break support, then there's a possibility we can go down. Wow, look at that candle go. Okay, that's good. I like this candle because now we're forming support. Make sense? Makes sense too. 3, 2, 1. Boom, support form. right? But if we look deeper in this candle, how many guys look at the charts like this? Like this. How many guys look at the charts like this? And you're going to draw your trend line, you'll see this, whatever here, and you'll take a buy. That's not the right way to look at the charts, first of all. First of all, there's no right and wrong way, but my favorite way to look at the charts, don't want to offend anyone, but my favorite way to look at the charts is like this. I zoom into the candles because if I can't see candles, I can't make a decision. So if I look at this right over here, I can see that there were candles that closed around, what's this price? 2031. And this bullish candle, even though it closed bullish, it closed below 2031. So we need a candle to close above this area, just like how we had to trade, right over here. Right over here. Same thing we need here. But if we break the support, then obviously there's a probability we can go down. So we'll have to wait. A lot of waiting over here. 10, 11, 12, 10, 11, 12, 1, 2. We are like 1 hour before London Open. So if we haven't had volume up till now, maybe we're going to have volume at, London Open. If we don't have volume at, wow, oof. This would have been a good impulse entry. But obviously we're not doing impulse entries. We're doing candle closes. Right? Makes sense. We're doing candle closes. So we're going to wait for a candle to close. All right. Let's pause this forward to the next candle. Candle has closed bearish with a rejection rate. What are we doing now? We're consolidating. Candles are printing side by side, which means consolidation, which also means now we have to really wait for a candle to close in a way that we can basically recognize, So yeah, we'll have to wait for the candle to close. So since we're waiting for the candle to close, let's forward this candle. Boom. Okay, the candle has closed. Huh? Candle has closed bearish. Okay. So this means we can take a sell for price to go down. Can we do that? Yeah. Right? We can take a sell for price to go down. Let's do that. Okay, 0.75. 0.75. Sell and stop high above the previous candle? No. Yeah, I think so. Let's do that. Let's do that. Okay, because we got to give some room for the spread too, So, yeah. Aren't you concerned about the wicks? Chris, what did I say in the beginning? What did I say in the beginning? I said in the beginning that I'm not concerned or afraid about the wicks because my weapon is volume. My weapon is volume. What's the reason to sell? The reason to sell is because we created resistance. Let me make this line a little bit thicker. So we created resistance here, okay? And then we created support right here. And then this candle broke and closed below support. So now this is an example of a counter trend trade. This is, I've explained in detail in the how to trade the counter trend section. And oh, wow, look at that. This thing is bouncing all over the place. Oh, this isn't coming up over here now. Oh, man, look at that. Only the spread came up over here. All right, let's slow it down here a little bit, man, in case we get stopped out. But yeah, you get the idea. So this is counter trend. The trend is bullish, so it's a counter trend trade. No, in this scenario, we're not talking about waiting for the first 15 minute or the last 15 minute. That's a little bit of a complicated, advanced trading, ideas. So we're going to talk about that when we have MT5 simulator. So anyway, let's wait. Okay, so this thing is still forming. Let's just see how this thing forms, and then we will be able to make some sort of a decision. Okay, let's forward this candle, see how it closes. Oh, wow, look at that. Awesome. Nice. Very nice. We closed about 11 pips right here. So I guess we can bring our stop loss down over here. Now, this is when I like to hold positions, right? Now, since I'm in profits for the week, there's a higher probability for me to hold the trade since I'm in profits for the week. So this trade, I'm going to be willing to hold the trade since I'm in profits for the week. That's it. There's no other reason. So let's wait for this candle to close. Forward this candle. Boom. 12, 1, 2, 3, 4. Okay, now look at that. The candle closed bullish. So I'm going to bring my stop loss above this high in case this candle moves up to try to stop me out. So it wouldn't be able to because my stop is above this candle. So yeah. So this is where I hold the trade. That's it. Just hold it. Wow, look at that. If we break the low, I think we can go further down. I'm going to try to do something complicated here. Oh, nice. Some nice gains here too. 18 pips, 18. 18, can we get to like 20 pips? Can we get to like 2027? Waiting is a difficult part. These 30-minute candles, what do you wait on candles, sir? If not life, any advice? What do you do? Oh, what do I do? I answer questions on YouTube or like, you know, where we do some sort of like I'm here with the team, you know, so I'm always busy. Oh, wow, look at that. We're coming back up at this point now. The candle, oh, it's only been 10 minutes here. Okay. No problem. No problem, mate. It's only been 10 minutes. Yeah, you just got to wait for the candle to close. That's it. The more you wait, the bigger your reward is going to be. Your reward is going to be. So this candle is going to close in about 5, 6 simulation minutes. 4 simulation minutes. We're up about 20 pips. And I think I should secure this right here because we're coming down to some sort of a rejection area here. Let's see what the first 5, 10 minutes bring on. Yeah, we're coming down to some sort of a rejection area right here. It's going to secure this. Nice one. Oh, wow, look at that. It went even further more here. Beautiful. Awesome. Let's move on to the next one. Oh, coming back up. Clean range. Oh, sort of like the same move we had in the first trade that we took. Interesting. All right, let's move on to the next one here. Wow, look at that. This candle's cool. 8, 9, 10, 11. 1 hour before pre-London. So the same thing we have to do over, what day is it here anyway? Is this a Thursday? Yeah, this is Thursday. So this is the last day that we're going to trade here now. We have resistance. First thing we need to identify, resistance. Awesome. Next thing we need to identify, support right over here. How big is this range? This is a 24 pip range. Okay, no problem. And then after this, you know, we can look at some other supports here as well. Let's kind of like make it like this. Boom, copy, bring this down here. There's no support down over here. So yeah, I guess we're just gonna wait it out and see how this forms. Because ideally we want price to break above that resistance. This is like a 23 pip range. Yeah, we'll have to wait. We'll have to wait it out here a little bit. We're still moving, coming up, rejection. We need either a break above 2027 or we need a break above 2025. Right now, we're about half an hour before pre-London. Let's forward this candle. Okay, bullish candle in the range. I like that. I like that. Bullish candle within the range. Now we need a candle to break above this area. Break and close above this area. That's what we want. Break and close above this area. Speed it up here a little. Okay, I made a support with wicks. It a wrong. Okay, we've broken above this area now. Now the same, look, man, this is the same scenario. The 3 days in a row, we've been breaking above resistance and we're creating some sort of a support to go up or something like that. You know, so right here, we have to create another support for price to continue to push up. Why is it that pip range is a very deal breaker for you? Because you talk about it all the time. Do we have to consider it all the time? Pip range is very important because if your pip range is a 20 pip range and you have a candle closing bullish and you want to take a buy, and that candle is 6 pips, 7 pips, Now you got 13 pip range. And out of the 13 pip range, you got like a 1.2, 1.3 pip spread. Now you got 11 pip range. So what are you going to get from an 11 pip range? Nothing. So which is why pip range is important to me, because it has to be a 25 pip range and above. Because if I have a 25 pip range, then I can get like, 10, 12, 15 pips out of it, ideally. And yeah, basically, but once we're out of the range, then you only need volume as your weapon. This is volume, your weapon, and volume is going to break through the ranges. That's what you want, volume on your side. Okay, so anyway, yeah, so we're trying to see if we can create some sort of a support for price to go up. Wow, very nice. Why no entry on the breakout candle? Because there was no entry. There was no entry. Where I would have entered? Above these wicks? No. Then my stop loss was no. I'd rather wait for a retest. There we go. Now we need a candle to close bullish. Oh, God. My God. Have to slow it down here a little bit. Puppy boy, have to slow it down here a little. So now we have volume on our side for price to continue pushing price up. And since this is the last trade of this simulation, what I'm willing to do is I'm willing to risk some profits here on the line. Since this is the last trade of the simulation. Oh, not 10 lots. What am I doing? 10-cent lots. So a buy is going to go, man, if it gives me some sort of entry point. If the next candle retraces, I'm taking buys, because now look at this candle. And if you go through the candle section, this candle has little to no wick at the bottom, very solid candle. Of course, there are rejections to the left-hand side. Of course, we know there are rejections to the left-hand side, but someone can say, aren't you afraid of the wicks to the left-hand side? No, because we have volume as our weapon. So we're using volume as our weapon. So if this candle can retrace a little bit and give us an entry, I think we can have a good trade to go up. It's only been 6 minutes of this candle forming. I don't look at evening stars, engulfing candles. They don't matter to me at all. Just a waste of time. There we go. All right, take a buy over here. Stop loss goes below the previous candle. Oh my God, this thing is still retracing over here now. Ooh! Wow. Okay. Buy goes right over here again. Now, total lot size, remember, it's 0.75. 0.75. We're only like, if we do lose, we'll lose like $20. What's 20 bucks out of the 400 that we've made? Nothing. $20, come on. Nothing. As long as it doesn't break the low of the previous candle, we're safe. We're good to go. As long as it doesn't break the low of the previous candle. So anyway, let's speed it up over here. All right. 11, 12, 1, 2, 3. So this is now London Open. Okay. This is London Open. And now we're going to tighten up our stop losses here a little bit. So now you got to make a decision. And I used to do this in 2017, 2018. Whenever there'd be like London Open, we would wake up in the middle of the night and we would wait for London Open. We would anticipate where price would go and we would just, hammer trades. Made some great money, but lost equal amount of money as well. Do we manage risk at this point? At this point, no, because the risk is already managed. Remember, original lot size is 0.75. So you're risking about $75 to $80 per trade. In this trade right now, what's the risk? $12 plus $7, around $20. So the risk is already managed. Even if I take another buy right over here, boom, doesn't make a difference because the risk is already managed. Well, can't move the stop loss here, but you get the point. Because this is dynamic risk. So go through the section of dynamic risk and static risk, and you learn the difference between the two, obviously, and when, and like, how to manage risk at the same time too. Wow, look at that. This is now performing really, really well. So now we can tighten up our stop losses. And since this is the last trade, of this simulation, and also let's say this is the last trade of this week, we're gonna let this run. So I think the first simulation session for Microfluidics University is going very well. Look at that. This should continue on now. So now we keep on trailing our stop loss right here. Boom, 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 boom. Oh, damn. Yeah, that's something which you can't really, identify. That's something you can't really identify. You can't predict something like that's going to happen. You just can't. It just happens. Let's see how this candle, let me just move my stop losses here as well. And let's see how this candle closes anyway. Oh, wow. Almost got stopped out there. Okay, close this. Boom, done. Finish. 10%. A little over 10%. Very nice. Very, very nice. Can you continue your story regarding 2017 Mount London session? Some of the time. It's a long one. Some of the time. Oh, wow. Look at that. We came right back down. All the secure profits, man. All this new, there was so much more from what we learned from your social media. The simulation confirms it. Thank you, man. I appreciate it. Thank you. Thank you. Eye-opener session for me. Best $97 spent. All right, made 600. Yeah. Made 600 right here. Made 600. So amazing. I thank you all for joining. I hope this was educational. So what we're going to do now is this recording will be in the database. So you'll be able to see it in the database. Have a great Sunday for whoever woke up early. Have a good night for whoever stayed up late. We will see you on Tuesday. Take care, everyone.